A Balasubramanian joins us, Managing Director and CEO with Aditya Birla Sun Life. Bala, so far so good, no one's complaining. I just want to bring your attention to what's happening in the world in terms of the global macro positioning. Bond yields are for 15-year high. Crude is on a boil again. US economy is doing well. Dollar index is rising. When these factors come together, markets historically has gone down. But so far, both global markets and local markets have resisted the fall.
I think it's an interesting trend. I think as you rightly put it, whenever the interest rates goes up to a significantly higher level, generally the assumption that all of us make is the cost of capital for companies will rise, so therefore will have an impact on the expansion and for the future growth, and therefore the market generally tend to correct. Then this time, I think what the difference that we see is, I think if you look at the US, a very interesting trend we are seeing. I think we moved away from a possible recession to a mild recession. Even mild recession also now it seems to be ruled out.
How extraordinary. Beginning of the year, we were speculating mild recession, hard landing, soft landing, or a dip.
And now we talk about Chandrayaan 3 in that conversation.
Which is supposed to be today.
Just amazes me.
Tomorrow evening.
You'll be up in the night, right?
I will just, anyway, it's all historical.
It's in the evening.
Oh,
all of us will be awake.
Sorry. My bad.
So I think if you look at it, job market in US is surprising and continues to do well. And the US has started spending money on infrastructure building. Therefore, that's reflect on commodity prices in general, I think, staying where they are. And oil prices, it's something has remained resilient, somewhere in the range of about $70 to $80. And food inflation in global market point of view seems to be hurting. I think if you look at the factor that driving on the negative side in one, which continues to stay, at the same time, the growth momentum in the US is not getting anywhere challenged. So that I think that's somewhere that we are seeing the disconnect. So that's why despite the bond yields rising, it's not hurted even the home loan borrowers in the US, given the fact that most of the home loan borrowings in the last many number of years have gone at a fixed rate of interest. Therefore, as and when they go for repricing, there's a high probability that consumer in general will start getting hurt. And last but not the least, I think after pandemic, most of the people instead of spending money on buying goods, they are spending money on tourism and travels and entertainment. So that's also
or
seems
buying
to be
mutual funds.
Not so much actually, but I think they are spending money. That's why you will see the hotel tariffs are rising.
No, SIP numbers say they're buying mutual funds. No?
Which is true.
The Mercedes CEO said that my cars are not selling because everybody's doing SIPs.
Yeah.
You remember that?
Yeah, I know that. Yeah, he gave us indirect marketing for us. So I think if you look at it on a holistic basis, definitely is interest rates being where they are, it should have impact on the market. But earnings growth continues to remain good. I think consumer spending in some form or other keep the overall momentum good. Job market continues to drive the growth in the momentum in the US. So that's, I think, is one factor is actually holding the global market intact. I think if you look at the rest of the market, especially for India point of view, despite all attempts that is being made by China as an economy, they are still not coming back in a hurry in terms of growth coming back. I think they're still faltering on growth. They're still discovering what they should do in terms of policy making. That's the only country where it's going the reverse trend as far as interest rate concerns. Most all other countries are rising interest rates except China. So again, that means they are actually seems to be looking at taking steps that could actually help them come back on track, but seems to be taking a lot of time. Given the fact the last 2 years, they also did equally a good big damage for some of the companies. When established companies lost in market cap, and people in China would have probably lost confidence in the overall economic growth and so on and so forth. That all seems to be favoring India. I think if you look at two markets which seems to be a good wicket, one is in the US, second is in India. And India seems to be getting huge allocations, a lot of stability in terms of policy making, politics, as well as on economic growth. The consumer spending in general has been pretty good. I think that's why I think money flow seems to be coming. One of the reasons I see market has been less volatile. I think I've seen historically whenever we see interest rates moving, even if a 10 basis points yield movement or a $3-4 movement in oil prices, generally I've seen the markets start negatively getting impacted. Yeah. That doesn't seem to be there because fundamentals of companies, fundamentals of the economy, especially from earnings expectation point of view, seems to be good. And high interest rate is not hurting any economic part of the country, whether it is in the US or in India. High interest rate is not hurting anyone as it stands today.
Right. Bala, back home though, what explains this gap that you're seeing between what the broader end of the market, the mid and small caps are doing and what the large caps have been up to? Large cap seems to have stalled the rally there, whereas on a daily basis, you have the mid cap index hitting a life high. I mean, traditionally, you would say that large caps would command a higher premium than mid and small caps, right? Do you think that this gap is going to be bridged, or do you think that the mid and small caps will continue their outperformance?
So the way I see is we go through the cycles. I think in every market cycles, we'll see large cap doing better than the mid cap, and mid cap suddenly they start doing better than large cap. I think the way I see the trend changing, I think if you look at the various moving parts of the economy, right from the investments-led growth that we are witnessing by way of infrastructure spending by the government, both on the roads and other infrastructure spending, as well as in the power sectors where there is going to renewed push that is coming in the power sectors, especially in the renewable energy side, a lot of action that is happening. I think if you look at it on a holistic basis, the kind of investment that goes in various places, I think seems to be benefiting many small companies. I think if you look at India as a country, there are many companies that are small size companies have got a lot of engineering capability, especially in the automobile sectors or in the fabrications or in the power sectors. They all have got a greater strength that they have established. They're all small enterprises. Second is small scale enterprises today are not starving for money. So either they get money at guaranteed by the government of India so that the banks can go and lend to them, and or they are all themselves able to get money at a cheaper rate. Therefore, interest rate is not hurting them. Therefore, the many small companies who have have established track record, that something seems to be benefiting that sector. Second, which I see is the second generation. I think I see also most of the companies, the first generation has now handing over to the second generation. Second generation is reasonably more visionary in terms of building the business next levels. That's something I am also seeing in some of the sectors, some parts of the countries.
Where are you seeing this?
In automobile sector is coming, in engineering sector it is coming.
Give me an example, not for a stock, but just to establish this point.
No, I'm just giving an example of, say, TVS group of companies.
Yeah, true.
So next generation is now taking
EID
charge.
Parry, Durgappa.
That next generation is taking charge. As the next generation taking charge, as long as they bring that culture of building business for the future, at the same time bring in newness in the form of innovations, I think they are actually bringing in those kind of changes which is most required for running these companies.
So Birla Mutual Fund says that vote for us because we have experience, we should think again, right? Go for a mutual fund which is young and which has less experience.
Of course, we'll always remain young, because at the end of the day, firms like us, though we have spent 30 years, still I always say that the average age of Aditya mutual fund is roughly about 34 or 35. So it'll always remain, new generation will come. I think what I see is the new generation bringing a new vision, a new vigor, new way of doing things. So all of them in a way is the shareholders value accretion methodology, I would say. That's why I think if you look at mid-sized companies, given the fact that we have a large pool of SMEs in the country, we'll continue to see this momentum.
They understand the importance of corporate governance. They understand the importance of, ek number, do number, to put it very bluntly.
Yeah. Building for the future, as you
No, I mean, there's a dark age in India. The tax evasion was there, corporate governance standards were compromised. You had a very large, unorganized economy which existed, but you never accounted for. But I think that is changing.
Yeah. Speaking of building for the future as well, when it comes to IT, a lot of deal wins are picking up. And then, of course, with the advent of new age tech like AI, how are you looking at, that as a catalyst for the IT space?
So I think IT space also have seen these cycles. I think the biggest advantage of Indian IT sector from a dot-com bubble to the subsequent period of change, and now I think we are into the AI and the ChatGPT kind of model is coming in. I think spending on IT infrastructure is not going to get reduced. Whether we like it or not, every company has to upgrade themselves on a continuous basis. That means spending by most of the companies to build their future bright, it will remain as forever. So that means Indian IT companies who have established track record of working with the global market, also established track record of building the skill set that is required for building, keeping the company's survival for the future. And that's something Indian IT companies will continue to get that benefit. Second is, as long as the companies have not made any mistakes in terms of creating a product which will not have the long-lasting life. That's why I think historically, if you look at IT sectors, any companies that build product for the short-term needs but not looking at the long-term needs, they are the one who have gone under. Otherwise, the companies have built product or services that could actually have long-lasting in nature, and they have survived. Therefore, IT as a company will remain integral part of the global economy as well as from India. Even India itself is actually transforming themselves as a digital economy as we move forward. Therefore, IT will remain as integral part. I think the key there is about one is the valuations, and that's something it command a high premium valuations. The premium valuations may get reduced given the fact some of the challenges are coming in. At the end of the day, the balance sheet will continue to remain supportive of the given the fact that it doesn't need much of capital investment except the people are the large capital raw material that they have. As long as that remains under control, I think IT as a companies would remain one of the integral part of the systems. Valuations, cycles, relative valuation basis, sometimes the sector will go through ups and downs. That's something you have to live with that.
So Bala, final question. We are looking at the SIP numbers being strong, but SIP gives you one picture. What is the inflow? What are the outflows in mutual funds, A, on an aggregate basis? So if you can broadly tell us that what is the total net inflow into mutual funds every month? Has the number gone up and down? One. And second, what are the average cash levels to your mind mutual funds are currently sitting on?
Yeah. I think if you look at the equity flows, we saw a peak equity flows in the year 2021, then 2021-22. I think since then we have seen the net equity flows have been coming down. The reason
what could be that number?
Now they average about 9,000 crores per month is the net equity flows. If you take the 15,000 crores of SIP flows per month, if you take, that's the registration number.
Yeah.
I think the way you look at on SIP, I think that the way to gauge the mood of the investors is how people actually keep writing a check a month-on-month basis, the form of registrations. But some will go, some will come in, some will go. I think like the net number would roughly about 7,000-8,000 crores would be the SIP flows. And the rest of the flows put together would be about 9,000 crores. We always see some redemptions coming in some fund houses, so it goes somewhere else. I think net would be somewhere around 9,000 crores.
Which is not bad.
Yeah, which is not bad. I think that's one of the reasons why DII continues to remain buyer in the market. So that is not a concern for me. And again, equity flows going through a consolidation is also a good sign. At the end of the day, people don't go overboard in taking a bullish call on equity, and then suddenly you see crash coming in and then run away from the market. Instead of that, I think a steady state of flows, I think, is more ideal for the market. From money manager's point of view, I think the cash flow will be generally nobody keeps more than about 4 to 5% cash levels, except few funds where we'll take an aggressive calls, aggressive bets in terms of cash, also one of the allocation. Yeah. If they decide as a part of the sector allocations, only those funds will have about say 10-12% kind of cash. Otherwise, if I take on an average, the cash held by the mutual fund money managers will not be more than about 5 to 7%.
Right. Bala, always a pleasure having you in the studios. Thank you so much for taking the time out.
Thank you.